Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into the financial world to uncover some juicy secrets about companies. Today we're dissecting Dayforce Inc. C2 2025 report, and let me tell you, it's got some interesting moves. As of July 30, 2025, there were 15,925,330 shares of common stock par 330 shares of common stock par value of 0.001 per share outstanding. First up, let's talk about how the company is doing overall. They're reporting for the quarter ending June 30, 2025, and we'll be looking at how they did compared to the same time last year. Looking at their balance sheet for June 30, 2025, we see total assets around $8.5 billion, which is down from over $9.1 billion at the end of 2024. That might sound like a lot, but it's mostly due to changes in their customer funds, which is a normal part of their business. What's more interesting is their goodwill, which is nearly 24 past acquisitions. Now for the income statement for the 3 months ending June 30, 2025, total revenue came in at $464.7 million, up from $423.3 million last year. That's a solid increase and a good sign. Their recurring services revenue specifically, which is their bread and butter, grew nicely. But let's look at the cost. Cost of recurring services went up a bit to $92.7 million. It's a small increase compared to last year, but it did go up. Product development and management expenses actually went down slightly to 57, managing those costs. Now let's talk about stock options. When it comes to their performance-based stock options, they saw quite a few forfeited or expired, 1,000 of them expiring or being forfeited. Switching gears to cash flow for the 6 months ending June 30, 2025, they generated $162.3 million from operating activities. That's up from $108.3 million last year, so they are getting better at turning profits into cash, which is always a positive sign. However, investing activities used up $180.3 million. That's largely due to buying and selling customer funds investments, but also includes significant spending on software and technology. They spent almost $48 million on software development alone. Financing activity shows a large outflow of $91.19.5 million. This is mainly because their customer fund obligations decreased significantly, a big change from the past. Kavian, let's look at a key number here. Recurring services revenue for the 3 months ending June 30, 2025 hit $393.1 million, up from $365 million last year. That's a 7.7% increase and shows their main business is growing. And total revenue increased by 9.8%, reaching $464.7 million. But those professional services costs jumped up by 10.1% to $76.6 million. That's a bit of a red flag, showing that getting clients set up is becoming more expensive. This increase in revenue and costs led to an operating profit of $42.3 million, which is more than double last year's $14.1 million. So despite rising costs, they're still making more money overall. Looking at the 6-month period ending June 30, 2025, their total revenue is $946.5 million. That's a healthy 10.7% jump from last year. But watch out for general and administrative expenses, which increased by a significant 13% to $130 million. That's a big jump and something to keep an eye on. And their net income for the 6-month period is $36.2 million compared to just $5.3 million last year. That's a massive improvement. Now let's talk about liquidity. As of June 30, 2025, they had $2.3 billion in cash, restricted cash and equivalents. This is down from over $3.1 billion last year. While having less cash might seem concerning, it makes sense given their large debt repayment and share buyback activities. They have a $350 million revolving credit facility, which is good to have for flexibility. Their term debt stands at about $643.5 million, which is pretty stable. The interest rates are around 6.3 to 7.1% though, so that's a notable cost. They also have convertible senior notes worth $575 million with a very low interest rate of just 0.25%. That's a smart way to borrow money. These notes are due in March 2026. The company has decided to settle these with a mix of cash and stock, which is often a good move to manage cash outflow. When it comes to compensating their directors, they have a pretty detailed program. We won't dive too deep here, but it shows how they structure compensation for their top people. They also have a deferral program for non-employee directors, which allows them to defer their compensation. Now let's look at risks. The company mentions that their disclosure controls and procedures are effective. This is important for transparency and investor trust, ensuring that all necessary information is shared correctly. Under issuer purchases of equity securities, they report buying back shares. For the 3 months ending June 30, 2025, they spent over $51 million repurchasing their own stock at an average price of about $57 per share. This can be a good sign when a company believes its stock is undervalued. In terms of legal matters, they state they are subject to normal legal proceedings like employment disputes and contract disagreements. They believe these won't materially affect them, which is reassuring. Looking at their revenue growth without considering float income, which is basically interest earned on customer funds, which is pretty smart, they grew by 11.5% for the 3 months ended June 30, 2025. Their Dayforce recurring revenue per customer as an indicator of customer size is up to $17.10 now, $75 annually, which is a great sign of growth and customer value. So what's the overall story here? Dayforce is showing strong revenue growth, particularly in its core Dayforce recurring services. They're managing some costs pretty well, but there are increases in professional services and general administrative expenses that warrant attention. Their cash position is solid, though reduced by debt management and share buybacks. The company seems to be investing heavily in its technology, which is crucial in the competitive HCM market. The low interest rate on their convertible notes is a smart financial move. While they face some market risks like currency fluctuations and interest rate changes, they appear to be managing them effectively. In my opinion, Dayforce is on a good growth trajectory. The increase in operating profit and net income is very positive. They are successfully converting their strategy into financial results. What do you guys think about Dayforce's performance? Do you agree with my assessment? Let me know in the comments below. If you found value in this breakdown, please hit that like button and subscribe to Corporate Decoder for more in-depth financial analysis. Also, join our Discord community linked in the description for more discussions and insights. Thanks for watching, and I'll see you in the next one.